Welcome to Adventure Terrain Ventures. I'm Aurel David, and in this video, we are going to talk about swing trading. Now, in the last video, we spoke about day trading or intraday trading. And I had mentioned that it's a good idea for if you are new to trading to start with day trading. So, logically, the very next step should be to move to day trading, move from day trading to swing trading. So what is basically swing trading? Now, swing trading is a style of trading where you take a position and you hold it for a couple of days. Now, it could be 3 days, 5 days, 10 days, maybe even 2 weeks. So there is no specific time limit for these, but it's just that you're going to look at slightly higher time frame charts. Usually, if you are doing day trading, you would look at a 5-minute chart and identify buying opportunities or selling opportunities, or you would sometimes use a 15-minute chart for an intraday trade. However, when you move to a swing trade, you would move to a slightly higher time frame chart, a 60-minute chart. Now, what's the advantage by moving to a higher time frame chart or moving to a little longer term trading? Now, day trading relatively has a higher level of stress. In fact, you have to be more committed and to the market to keep looking at price charts from time to time. However, if you, as you would like to, graduate or move to a higher level in trading, you would not want that much of stress. You would like to, identify some trades, place an orders, and then go out and do your own thing. So swing trading would help you do that, because now each time frame, the 60-minute time frame would have a 61-hour candle. So it takes probably an hour for a candle to form. So there's nothing that you can do in between that time. And you would probably need to just look at the charts maybe twice a day, during the market hours, and then you could do your other thing. So what is the advantage by doing swing trading? So the main advantage, as I said, is a lower level of stress. And the second advantage of doing swing trading would be that you don't really need to take a very big risk as compared to maybe positional trading. Now here, you would be able to go into equities. If you go into equities, you can only do long positions. You cannot do short position in equities. The reason is because short positions have to be squared off on the same day. So you would be doing long positions only. And what we will be doing in swing trading is trying to find out opportunities on a chart where there could be a sharp move in price in a short span of time. So this is a good way to to take advantage of such kind of moves. So your swing trading would require a little higher capital compared to day trading, because you would need to take delivery. So you do not get the 10 times exposure. Probably you will get about 5 times exposure, that too for only 2 days. Now you can opt for exchange margin funding facility, wherein you can hold your position with about 5 times exposure for n number of days, and you will be charged an interest for the outstanding amount. However, it's a very good option to utilize exchange margin funding if you are a long only swing trader. However, if you would like to play both directions in the market, long and short, then you would need to garner a little more capital and get into futures. So futures allows you to take long positions and hold it overnight, as well as short positions and hold them overnight. You can keep holding your positions till you achieve your target for 4, 5, 6 days, and future positions can be held on at least till the expiry date. You can even trade options for swing trading, and swing trading would be an ideal trading style for option traders, right? So since looking at very low time frame charts really do not help with options trading, looking at maybe a 60-minute chart or a 75-minute chart would be ideal for swing trading. I used to use 60-minute charts earlier, but nowadays I have started in certain cases using 75-minute charts for my swing trading. The reason is because in India we have markets open from 9:15 to 3:30. That's a little over 5.5 hours. So if you're going to use uh, a 60-minute chart, then you would have every day the last candle of a duration of only 15 minutes. To overcome this, I have started moving to a 75-minute chart, because when I go for a 75-minute chart, then I get candles of equal length. When is a good time to enter into swing trades? Of course, I don't really have any time preference for entering into swing trades. Whenever the price enters an area of demand or supply, whether it be in the beginning of the day, middle of the day, or end of the day, I just enter the market. But however, I have observed that my best swing trades, which are the ones where I get a good profit, are the ones which are entered in the either in the beginning of the day or at the end of the day. So usually between 3 and 3:30, I get really good swing trades. So I take positions in futures and hold them overnight. Many a times I see the targets being achieved in the very next day. However, we need to be very careful with overnight trades because, as you must know, the stop loss cannot be held overnight, right? So if the position gaps against you, that means if the market gaps against you, you could lose more than what you planned for. So your risk you end up sometimes losing a little more. But that can easily be compensated, because many a times the market will also gap in your favor and you may gain more than you plan to gain as well. Let me now show you a swing trade which I had planned quite some time back. Okay, this is on Dish TV. Now, if you can look at this demand zone, as you can see, this demand zone was planned over here quite some time back. So this was planned sometime in the month of March. So right now we are in July. So it's June, July, almost about 3 months after I planned this trade, I get my entry right here this week, right? So it's not that, a zone or a demand zone is only valid for the day, or it's not only valid for a week, or, even 3 months later after I plan the trade, if the price comes back into my area of demand, still, those demand zones can work. Now, I have used here a 60-minute chart for planning this swing trade. And usually I'll identify my zones in a 60-minute chart for my swing trades. So what are the other time frame charts I use for my swing trades? I definitely look at the daily chart as well when I plan a swing trade, because the daily chart gives me an idea as to what is the trend in the market. So I usually use my daily chart for trend, and then I use my weekly charts to get the overall bigger picture of the market. So this weekly chart gives me a bird's eye view or a higher time frame view of what is really going on in the market. Where are the higher time frame demand zones and supply zones? Am I very low on curve, or where am I on the high on curve? So these are things which my weekly chart will tell me. But now let's go back to the 60-minute chart where I had identified this area of demand. So let us first zoom into this area where I had planned my trade initially. So this is where the trade was initially planned. So I'm sure you can see here what we have is a pause followed by a very sharp up move in price. So I have just identified this zone here as a demand zone, and just above my demand zone I have placed my entry price, and just below my demand zone I have placed my stop loss. So this is how I plan the trade. So let us see what actually happened after I planned that trade. So price went all the way up, came down, it came close, but it didn't really enter my demand zone, and it was hovering around here for quite some time. And it was just that this week, as you can see over here, price suddenly came down. If you observe here, can you observe the speed in which the price is falling? So there's a very sharp fall. But where did the fall stop? If you can notice, the fall exactly stopped at the area of demand. So that's why I'm very fond of these demand zones and supply zones, because they respect these, most of the time. So I entered right over here. And after I entered here, price straight away shot up, came almost very close to my target. I missed my target by 10 paisa, and then price dropped all the way back. But what I had done is I had trailed my stop loss from here to the entry price over here, while price reached, over here itself, halfway to my target. I usually trail my stop loss. And the price came back to it came very close back to my entry price where my stop loss is. And I thought, okay, my stop loss is going to hit and this is going to be a break-even trade. But quite surprisingly, the price bounced back again, and it missed my stop loss by just 5 paisa over here. So if you can see the low of this candle, it is just 5 paisa above my entry price, 70 paisa, and this was 75 paisa. So I did not get stopped out. Not this is the candle, yeah. So this one. So I did not get stopped out, and then again price bounced, and then it went and just achieved my target. So I was out of my trade, within the same day, though this is a swing trade. Okay, a swing trade does not necessarily have to go for many days. Okay, this ended up in an intraday trade. But what if my target had not achieved? I would then still continue to hold. It's not that, I will square off at the end of the day. If it was an intraday trade, even if my target is not achieved, I will square off at the end of the day. But in this case, I would have held, but then I didn't have to. Okay, I had my target achieved on the very same day. But even after that, the next day, just see what happened. The next day, price again came back to the area of demand, again bounced up from there, right, and went up. And again now prices are coming back to this area of demand. So whether prices will hold even more, it's a little bit unlikely. I wouldn't want to trade the same demand zone for the second time, because it's not that probable. Many traders do. They, even when the price comes back into an area of demand, they enter it again. But I typically don't do that, because I see that it is less probable. So now here prices are approaching the demand zone for the third time. It could be prices might come and again bounce, or they may even break through this area of demand. Let us now move to the chart of Nifty and do our regular Nifty analysis to see what's happening in the markets as a whole. So this supply zone, which we were discussing about last week, still stands. It has not been violated yet, as you can see here. So price had gone very deep into the zone, came down, again went up a little bit, and it has been only in this entire week fluctuating in this narrow range within the daily supply zone. So this indicates a lot of sell orders getting filled, and the price, this supply zone is getting weaker and weaker, and it's very likely, I wouldn't be surprised if price finally goes above and breaks violates this area of supply, right? So markets are showing good strength. If the supply zone was very strong, price would have immediately come down like it did a couple of days back here and here. But as you can see, the first time price moved till here, the second time price moved only till here, a third time there's only a very small bounce. Now what would happen is subsequently price would go up and violate this area of supply. So I really don't think we'll even get an opportunity for price to come all the way here to our demand zone and we could buy. But however, I will still not take these kind of trades. I will not go long right now in expectation of supply zone to be breached. I would only go long once supply zone is breached. And if you look at higher time frame charts, if you look at the weekly chart, there is no supply zone weekly at all, right? And if you look at the monthly chart, there is no supply zone in the monthly chart as well. So coming back to the daily chart, I would just like to remain cautious, watch the market, and not take any positions in the Nifty. But definitely there are great opportunities in stocks. I keep planning intraday and position and swing trades in various stocks, and some stock or the other always gives me an opportunity. So that's all for today. If you are wondering exactly how to draw these areas of demand and supply, where do we place our entry, stop and targets, what are the rules, we will be going through that in great detail in our course, the Stock Market Model Street. So to get more information on the course, you may visit our website, that is adventureterrainventures.co.in.